Hello, everybody. The topic of discussion today is issues for NRIs on transfer of Indian assets after death. Under this topic, we will be discussing it in three parts basically, where the transfer of assets happens by a will, transfer of assets in absence of a will, which is obviously by the law of succession in India, and a planned transfer of asset by a private trust. So with this topic and with this points of discussion, I will go to the subject proper. Basically, insofar as non-resident Indians are concerned, they have obviously global assets. Global assets, by that what I would mean is that assets in India and assets outside of India. As far as assets outside of India are concerned, the transmission or the succession of the assets outside of India would be governed by the respective laws of those jurisdictions where the assets are located. And as far as the assets which are located in India, they would be governed by the laws of succession in India. So, while planning about succession, one has to be very clear that when an asset is located in India, the laws of succession of India would be something which would be material and would be operational insofar as the transmission or succession of the assets in India. Now, on death of anybody, there are two things which can happen. One is that it might be a testamentary succession of assets. By testamentary succession, I would mean that there is a will which is existing in respect of the assets, and on the basis of that will, the assets are bequeathed or transferred or proposed to be transferred to whosoever is the beneficiary as mentioned in the will. In India, the testamentary succession is governed by two laws, the Indian Succession Act and the Muslim Shariat law. Insofar as all the communities except the Muslim, the law which is applicable in respect of will is the Indian Succession Act. And for the Muslims, it is the Sharia which will be applicable for the Muslims. Now, the another possibility that can happen is that somebody dies intestate. By that, what I would mean is that somebody dies without preparing a will in respect of the assets. Now, in that case, what happens is that insofar as the Hindus are concerned, the law applicable is the Hindu Succession Act. The act also applies to Sikhs and Jains also. When it comes to Muslims, the law of succession which is applicable, once again, very sorry for the technical difficulty. I will just reiterate and connect with what I was just talking about. On death of any individual, what happens is that there are two types of succession that would happen. One is a testamentary succession, and under the testamentary succession, there is a will which is pre-existing in respect of how the property should be bequeathed in respect of the properties, especially the ones which are located in India. And it is governed by the Indian Succession Act in respect of all the communities in India except the Muslims. Insofar as the Muslims are concerned, the law of succession which is applicable to them is the Sharia, the Muslim Sharia law. When somebody dies without preparing a will, then it is called an intestate succession. And when an intestate succession becomes operational, then it depends as to which community the deceased belonged to. So if the person who died belonged to the Hindu community, then the Hindu Succession Act would be applicable. And as far as Sikhs and Jains are concerned, the same law, the Hindu Succession Act, would be applicable. When it comes to a Muslim who has died without preparing a will, the Shariat law, once again, would be applicable to them for the succession in absence of a will. For the communities other than the ones I mentioned, the law applicable would be the Indian Succession Act. Now, let us go into a little detail about the testamentary succession. Now, in order to bequeath assets under testamentary succession, there has to be a valid will which has to be in existence at the time of death of the person. Now, what is a valid will? A valid will is one which is in writing, which contains a clear-cut identity of the person who is executing or preparing the will or making the will, or in respect of whom the will is being prepared. Details of the assets to be bequeathed, which are clearly mentioned in the will with all their appropriate details so that it might not create any confusion. Names of the beneficiaries who are supposed to receive the assets under the bequest, signature of the person who is making that will or executing the will, and that will needs to be executed in presence of two witnesses. So these are the absolutely basic fundamental characteristics or the requirements of a valid will. Now, the question which arises in the minds of so many people is that on what kind of a paper that will has to be prepared or executed. A will which is to be made valid in India can be prepared on a plain piece of paper. It might be, it might not be notarized. It is advisable to notarize a will, at least for the reason that it will not create any doubt about the person who has signed the will and the day and the date on which the will was executed. The will can be on a plain paper. It need not be notarized. It is always advisable that a will is notarized. And in case, if it is expected that there might be a lot of maybe legal related issues in terms of contesting or challenging the validity of the will, and the age and the state of the health of the person who is executing the will is of a certain type, then what is advisable is that the will be registered, and that registration has to be in India. But this does not mean that every will to be held as a valid will needs to be registered. It is absolutely fine if a will is executed, as I said, on a plain piece of paper, and even if when somebody is not present in India, they can execute a will in a foreign territory, and ideally over and above the two witnesses who has to sign at the time of signing of the will, by the person who is executing the will, if it is notarized by even a foreign notary, it is definitely advisable so that the validity of it doesn't come under a challenge when the will is bought for execution in India. Now, we will look at the other aspect, which is the intestate succession. Intestate succession, as I said and I repeat, is a situation wherein the person dies without executing a will. In that scenario, as I said, different laws would be applicable in respect of people of different religion. So when it comes to Hindus, as I said, the Hindu Succession Act would be applicable. For Muslims, the Muslim Shariat law, and for the other communities, which may be, say, a Parsi or a Christian or anybody, the Indian Succession Act is applicable. So in case if somebody has died without executing a will, the law as it would operate in case of Hindus would be that when a Hindu male dies intestate without preparing a will, then in that case, in case of a Hindu male, the legal heir of the first order would be, who are called as class 1 heirs, would be the mother, widow, daughter, sons, and heirs of the predeceased son or daughter. It may be noted that a father is not included in this legal heirs of class 1. By class 1, what I would mean is that if there are any or more than one legal heirs of this category, that is class 1, are already available, then nothing will go by way of any right of succession to the others who are there in the order. So if there is just one class 1 heir, the entire asset would get transmitted to that legal heir. And if there are more than one class 1 legal heirs, the relationships which I mentioned, in that case, the assets would be distributed equally amongst all these legal heirs. And they all hold, or they all are at par at the time when these assets are to be transmitted to them. So if there are 4 legal heirs of class 1, then each one of them would receive 25% of the estate. And if there is just one person in that class 1 category, then the entire asset will get bequeathed to that person only. Now, in case of Hindu, not included. So this would be the situation of transfer of asset in case if somebody dies without executing a will. Now let us look into that aspect of nomination. Normally, whenever any movable assets are invested in India, the person who is carrying out the formalities in respect of that movable assets always suggests that you make a nomination in favor of anybody whom you deem fit. At times, nomination is misunderstood with the legal right of bequeathing a property or bequeathing of an asset. The person in whose favor the nomination is executed is merely the custodian of the asset. In so many of the cases, that custodian is the person who is as such supposed to receive the asset by way of bequest. So in case I have made a nomination in favor of my son, and he is the person who is the person who has been mentioned in the will in favor of whom the assets are to be bequeathed. So he is the person who acts as a custodian, and eventually he is the beneficiary under the will, and he will get a title over it. But anybody in whose favor a nomination is made, it is not necessary that that person is the owner, or that person cannot claim that I am the owner of the asset in which my nomination has been made, and he would deny that he would follow whatever has been stated in the will, or in case if there is no will existing, then the law of succession. So the final owner of the asset is none other than the one who is stated in the will as the beneficiary of the asset. And in case if there is not a will which is existing, under the testamentary succession, under the law of succession which is applicable to that respective person, whosoever is the legal heir is the real owner of the asset. Now we take the last part. My discussion is how to bequeath the property in India by way of a trust. Now, in the first place, let us understand that why is a trust kind of a structure required to bequeath assets. So let us understand the difference as to if an asset is bequeathed by virtue of a will or by the law of succession in case of intestate succession, and the way the assets would be bequeathed by way of a will. Let us understand the difference. When an asset is bequeathed by a will, then the person who is the beneficiary becomes a owner of the asset the moment the person who has made the will or executed the will dies. So the person who is next in line, the beneficiary, becomes the sole owner. He may dispose of the asset. He may use the money in whatever manner in which he may deem fit, and there are no restrictions whatsoever. The same is true when the assets are transmitted to a legal heir under the law of succession. So the successor becomes the owner, and the owner, the new owner or the successor, can sell the assets, do whatever he or she wants to from the assets which have been received by way of transmission. There are no restrictions. But there are people who feel that I have in my lifetime made, or rather created, this much assets which are quite sufficient for the next generation to enjoy during their lifetime, and at times to enjoy these very assets beyond the lifetime of the next generation even. Say they have made a fortune. So they would wish that my next generation and the generations to come, they don't fritter away this wealth or misappropriate this wealth. But at the same time, they feel that my next generation should enjoy the benefits of the wealth that I have created. So what they can do is that they can create a family trust, a private family trust, wherein the beneficiaries would be the next generation, the relatives, the dependents, and maybe even their children. And the property of the person who is preparing the will would travel or go to the trust, the private family trust, and there would be trustees who would be appointed who will take care that whatever are the wishes of the deceased would be honored. The wishes could be that in the lifetime of the next generation, what they can do is that they can enjoy the returns on the investments of this property, but they will not be able to sell it. Maybe even they can provide that till 20 years, 25 years, this property cannot be sold because the children or the relatives to whom the property is supposed to be bequeathed are young and they might not understand their interest. So, in this manner, a restrictive way could be arranged, wherein which is a via media kind of an arrangement where incomes are set to be enjoyed by the next generation, but the property as such or the ownership or the right of disposal is not given away to the next generation. This arrangement is very much appreciated and recognized in India, and where large assets are to be bequeathed to the next generation or to be passed over as legacy to the next generation, this kind of arrangement is something which is worthwhile. But the negative side or the something which we need to keep in mind is that first, we should have that kind of trustees with who would be around all the time to take care of the next generation or the persons who are beneficiaries and would be able to act in an absolute impartial manner in the interest of the beneficiaries. That is something which is very important. To with the changed circumstances for the beneficiaries, there would not be a room for them to really dispose of this property and do whatever they want to for the reasons or the dynamics it might be changing. A private family trust formed by a will or by virtue of a will has got certain tax concessions, and there are certain quite very well advantages, and this is the way the Indian tax laws have even recognized the utility of this kind of an arrangement. So to sum up, what I would just to reiterate what I was saying, that succession in respect of assets in India has to be managed within the laws which are in India. For the assets which are held outside of India, the foreign laws would apply. The Indian laws would apply as far as the Indian assets are concerned. If you make a will, then whatever are the assets would be bequeathed in accordance with the will. If a will is not made, then the assets would be bequeathed under the law of succession. Third, a nomination is not a final word for bequeathing of assets. A nominee is a custodian, and as I said, in most of the cases, the nominee is the person who is the beneficiary under the will, so things can move in a seamless manner. But as such, it is not something which is under law that the person who is the nominee is the final owner. And the last part of my discussion was about the trust, the utility of transferring of assets for the benefit of the next generation without transferring the ownership. I would be glad to answer the questions which might arise in respect of this topic or any other topics which a non-resident Indian might be interested in. You can press the button of raise your hand, and my office will unmute that person, and you please say your name and location, and I will be addressing your question right away. Thank you. Please, the house is open for questions. Please.
Good evening, Mr. Kothari.
Hello.
A quick question for you.
Yeah.
Whatever investment I have through my NRE account, which is an external account, if I dispose it off, how the tax, if any profit is there, is taxable and how it is paid?
So whatever are the profits that you derive in respect of any investments in India, it depends upon the asset which is disposed. If they are assets which are, say, equity shares, just for instance, then it would be taxed as long-term and short-term capital gains on the basis of your period of holding. So if there are assets which are other than that, then whatever is the respective rate of tax would be applicable. We need to pay those appropriate taxes irrespective of the fact whether that investment is from NRO account or NRE account.
Okay, and I don't have any PIS account attached to the NRE account. So is it required to have PIS account, or I can just report that without PIS account when I said dispose of my stocks?
Okay. A PIS account is required when somebody intends to buy shares in Indian companies after that person has become a non-resident Indian. So if you were holding stocks which you were holding at the time when you were a resident Indian, you can continue holding those stocks in an account which is a non-PIS account, in a demat account where your status is a non-resident, and the monies in respect of the disposal of those shares would travel to your NRO account. If you intend to buy any shares from that funds of the NRO account, you might as well buy those shares, and those monies, those shares would go to the demat account which is mapped with that NRO account. But if you intend to invest fresh funds from abroad and would like to invest through the NRE account, then you need to have an NRE PIS account, which is an account where monies will move out, shares will go in, and vice versa on buying and selling of securities.
Okay, the thing is, I have the investment with the NRO account, and also I have it with the NRE account. Now, I do not want to invest anything from the NRE account, but I want to dispose that off. Will that fund will go into my NRE account, or will it go in NRO account?
Okay, in the first place, when those investments were made from the NRE account, they have to be through the PIS route.
This is, I'm talking about 30 years back. So there was nothing like this.
Okay, fine. So in that case, the account which is mapped with the NRE account, right, the demat account, those funds, I would use the word can go to the NRE account technically. But now, in order for you to prove that these were the monies, if it was a NRE PIS account, it would have been very crystal clear. But now, in order to prove something which was what has happened 30 years back today, it might be difficult. So let those funds go to the NRO account. Don't worry about that. The rate of tax is the same. Then after the monies have traveled to the NRO account, you can, under the 1 million US dollar scheme, you can convert the NRO money to NRE, or maybe those monies can travel outside of India if you wish to. So that's not a problem.
Okay, right now my
Just a second. Unmute करो. नहीं, નથી થયા. Yeah, please go ahead. Now I can hear you.
Okay, all right, sorry. So basically, when I invested, and the trading account is attached to my NRE account. And when I was talking to the bank people, they said, yes, when you dispose it off, it will go back to your account. So I'm really confused here, that's why.
Right. I do understand. The only requirement is that in today's, whatever has happened in last 15 years, 10, 15 years, there was always this provision of NRE PIS account. So for somebody who is a banker to understand that there were times 30 years back when this PIS stuff was not there, it might be difficult for them to understand. So maybe the via media which I'm talking is that, okay, if he says that, no, this cannot go to the NRE account, is okay. Ultimately, the tax liability is the same. The only thing is that repatriability of funds is anyways which is available, because I'll take that money to the NRO, and under the 1 million scheme, I can always do it. That's just something which we can always do.
Right. Okay. That makes sense. Thank you very much.
Pleasure. Thank you. The next question, please.
Good evening, Daxesh. This is Kishore Thakur.
Yeah, Kishore bhai, how are you?
Congratulations and an excellent, very well, excellent performance, and listening to some of your presentation with the support of the team and regular calls from Premji bhai as well. I'm sure Mr. Lalwani would be more appropriate if he had actually brought his workings back into Ashutosh investments, and you would be able to resolve problems. Some of the questions I have, very kindly, please. Yeah. One thing on the will you mentioned, Daxesh bhai. Is it beneficial to have separate wills, one overseas and one local within India, if you have assets within India? That is relating to the will. I think you did mention relate with reference to it. And if you have a will that is set up under the conditions of immovable property assets, which are in joint names, does it automatically fall into the party that is still living at the time? That is one of the aspects on the questions for my will, please.
Okay. Fine. I will address the first issue which you said as to is it required that we have separate wills for the foreign assets and the Indian assets? My answer to this would be you can have a will for assets which are across the globe, which includes India, but it is not advisable, because what happens is that there would be two sets of laws which would be applicable as far as the succession aspect is concerned. So if we look at the way practically the things would happen is that if we have one will, which is a global will in respect of global assets, then the person in India who is say you need a probate for that will. When you apply to the courts for the probate of a will, then you have to submit that will which contains the details of the global assets also, and we need to make that that filing to the court. Then if I have to share that will with somebody who is buying a property in India, then also I have to give them the will in respect of the entire global assets. So our advice to all our clients is prepare two separate wills. One for the assets which are located outside of India, and the another one for the assets which are located in India. And the assets which are located in India would find the mention and the way it is to be bequeathed in the Indian will. That is part one of your question. Then the part two of your question is that if there are properties which are held on a joint basis, then will it happen that it would operate like either or survivor? So if any one of the joint holders is no more, the property would automatically get transferred to the joint owner who is surviving. No, this does not happen in case of immovable assets. In case of movable assets, may it be a fixed deposit, a mutual fund investment, a demat account, you can hold movable assets on a either or survivor basis, and the account, the operability right of that account would get transferred immediately the moment any one of the joint holders are deceased. But this does not happen in case of a immovable property. They are not joint holders, but I would use the term that they are co-owners. So whatever is the share in respect of each one of the co-owner is the share of the person who is the co-owner, and whatever in terms of succession would happen in respect of his share or her share in that property. So automatically it would not get transferred. The succession will operate in respect of his or her share, whosoever is the deceased.
Thank you very much, Daxesh. And I gather Ashutosh Financial Services do provide the service of preparing wills.
Yes, we do. We do.
Thank you. Can I just ask one more question regarding investments?
Please, please.
On the indication of future investments under the present conditions, how do you see over the term period, as people are growing older, you want to spend money rather than just keep saving it. But over the term, say 3 to 5 years of investment that you do on equities, mutual funds, debt funds, should you have the recourse of repatriating those funds again after 3 to 5 years' time, would you see the benefit of the repatriation in terms of currency fluctuations? And how do you evaluate the currency fluctuation, reduction in terms of your profits acquired over 3 to 5 years?
Okay. The first part of the question, which was in relation to investment in equities. When somebody invests into equities, one should have a clear-cut horizon of at least in the present times, which are turbulent times. You never know what is going to happen tomorrow. So somewhere between 3 to 5 years and advisable 5 years. So there might be so many things which might happen in 5 years. And if somebody is dependent upon a steady source of income on that investment, my advice would be clear that one should not venture into equities, because equities might perform in a manner which is absolutely non-linear. So if somebody is dependent upon the cash flow, one needs to go for investment into debt-based instruments, which could be a fixed deposits or a debt fund or something of that sort. Now, the second part of your question was that the repatriability of funds after they are invested in India. So what I understand, say there are funds which are invested in India, and from those funds, whatever is the kind of return is generated, and then those returns are supposed to be used outside of India. So you are exposed to that currency fluctuation at the time when you made the investment and the time when you are repatriating back the returns on those investments. Yes, you would be exposed to the kind of fluctuations, and in order to really gauge and figure out what could be the kind of fluctuations that would take place, the normal approach would be that we might not be able to figure out. But my understanding and my thumb rule, which I feel is that whatever is the kind of inflation differential between the two economies, that would get adjusted in the depreciation of a currency over a period of time. It might not happen in an absolute linear pattern, but over a period of 2 years, 3 years, it would so happen that the inflation differential, say there is an inflation of, in US, it is say 1%, in India, it is say 4, 5%. Then it is all set that 3, 4% will get settled over a period of 2, 3, 4, 5 years, maybe in bouts, by way of depreciation of the Indian rupee. So this is a thumb rule, and that we need to always take into consideration. So at times, it apparently so somebody would feel that there is a higher rate of return on fixed income investments in India. But the way to really make a judgment on the return on fixed income investments would be that whatever is the rate of interest available, from that we need to deduct the inflation, and that is the real rate of return. And if that real rate of return between the two economies is something which is beneficial for a fixed income investor, it is only then it is worthwhile making fixed income investments in India.
Thank you very much, Daxesh bhai. Appreciate that.
Thanks for joining.
The company's support as well.
Thank you. Thanks for joining.
Hello.
Yes.
Sir, can you please highlight the tax implications if we continue the family trust in India, and also if any reporting to government is required or not?
Okay. As far as a private family trust is created by virtue of a will, and maybe even if it is a discretionary family trust, wherein it is at the discretion of the trustee that how the incomes are to be distributed today and tomorrow and thereafter. And if that is the only trust which is created under the will, then that trust would be taxed at a rate at which individuals are taxed in India. Otherwise, a discretionary family trust is taxed at the maximum marginal rate. But in case of a discretionary family trust created by virtue of a will, it would be taxed at a rate which is, as I said, the normal rate which is applicable to individuals. That is part one as far as the taxability is concerned. As far as the compliance is concerned, the compliance which is required is that it is a separate entity recognized by law and by the Income Tax Act in India. So it needs to have its own income, its own permanent account number, own bank account, and own assets which are held by that very trust. So it will create a liability in terms of compliance in respect of that trust. So that is something which is required for a family trust.
Sir, my question is that in case of demise of a father, normal assets are fine, like we can receive an inheritance. But how the assets which are will be treated, which are held in HUF status in the name of the father?
Right. So what I would like to clarify is that HUF is an entity which is an entity separate or distinct from an individual. So whatever are the assets which are held by a HUF are family assets, and if in case father who was the karta of that HUF dies, then the eldest son or daughter of that family automatically becomes the karta, and the HUF still remains operative, and the future operation as a manager or the karta of that HUF is supposed to be carried out by the eldest sibling in the family, and that entity with the same name can continue till the time the co-partners and the members of the family so desire.
Hello?
Yes.
Sir, what are the tax implications upon receiving the assets through inheritance in India?
Whatever are the assets which are received by way of inheritance in India, they are absolutely tax-free in the hands of the recipients by virtue of will or by way of succession. In case of an intestate succession, whatever are the assets which are received, they are absolutely tax-free in the hands of the recipient. There are no tax liabilities which would arise on account of the receipt of the properties.
Okay. Sir, and how an NRI can transfer the title of an immovable property in case of demise of his parents? And what actually the process would be to transfer the asset, that immovable property in his name in India?
Okay. So as I have been talking, that there could be two possibilities. One, it is with the will that somebody demises, or it is without the will. So in case if somebody expires after a will has been executed, then a probate is supposed to be obtained in respect of the assets of the deceased. And after the probate has been obtained from the court, then that is all which is supposed to be done. And thereafter, all the government records, one needs to supply the copy of that probate that the court has granted me the probate in respect of the will by which I am bequeathed with this property, and the property would get transferred in the revenue records. And whenever somebody wants to execute a document for transfer, sale, mortgage, or anything, the person in whose favor the probate has been granted in respect of that property can always execute the sale document as the owner of the asset. Then it is a case where somebody dies intestate without preparing a will. In that case, the actual process which would happen is that the legal heirs of the deceased are supposed to be determined, and under the law of succession, they would all become the co-owners of that asset. And at times, what is required is a succession certificate is required from the court. There are situations where succession certificates are not asked for by the person who is buying the property, then a family tree certified by the local authority acts as good enough for somebody to really put forward that we are the legal heirs of the deceased. But ideally speaking, a succession certificate from the court that we are the legal heirs of the deceased, and these are the properties which are left by the deceased. So on the basis of that succession certificate, the ownership of the property would get transferred. Fine, I think we'll end the session, and please join us in the next weekend. Next week is an important week insofar as Indian economy is concerned. Everybody across the world and in India wait for that day when the finance minister rolls out the union budget, and the budget is supposed to be rolled out next week. And next weekend on Saturday evening, I'll be talking on the union budget at length in detail, and please join. And it will be in English, and the same presentation on the union budget will be in Gujarati on the next day, that is the Sunday morning. So next Saturday and next Sunday, please note, join, you are most welcome. Any questions on any subject, any aspect of NRI are most welcome. Thank you. Thank you very much.